I'm Dan Wilton, the CEO of First Mining Gold. First Mining is a project developer with a portfolio of projects in Canada, including our Springpole project in Ontario that's moving through feasibility and environmental assessment, and big announcement today around our Duparquet project in Quebec.
Well, absolutely. Duparquet Gold Project. What's that? Why have you done it? Why did you need to do it? Shouldn't you be focused on Springpole?
It's a good question, and the answer is it's not diluting the focus, but it's adding another pillar to the story here. This is a project that we've owned a portion of since First Mining acquired Clifton Star in 2016. So it's a project we understand really well, and we've been trying to pull this together for a while. And finally came to a point where we could get agreement with our partners on finally bringing this project, which is it's a complicated structure, as you see in the release, but finally bringing this all together to put together a project that's going to be sitting with in excess of 3 million ounces of indicated, another 2 million ounces of inferred resources, in an area of outstanding infrastructure in the middle of the Abitibi. So really exciting project for us to do it.
Right, okay. I mean, you're going through a process of building up ounces, it seems, because if I look at your portfolio construction, you'll see Springpole already got 4 million ounces. This is bringing in 5 million, all categories. What are you hoping to do here? Because I come back to the thing, is it a distraction? Have you got complementary skills? What is the sum of the parts equal?
Yeah, no, it's. Listen, I think it's a great opportunity for us while Springpole is at the stage that it's at. And you'll recall we've just put just published our draft environmental assessment document. It's now in with regulators, being reviewed. We're going to start receiving comments back, and some of that back and forth process. But we do have a window, here where the team certainly has capacity to be able to kind of go to a project that's at a slightly earlier stage and needs some rethinking, and also needs really kind of starting with that environmental baseline work to do some of the longer lead time work that's going to allow us to scope a really robust project in Quebec. So I think not a distraction, but again, just like another pillar of the story here. This is going to be one of the core projects. And then the rest of the portfolio, as we've talked about a bunch of times, it's there fundamentally for our shareholders to continue to have exposure to projects that our partners are spending money on and making great progress on.
Right. Okay. So I do want to actually continue that line of thought, but first, let's explain to me what exactly you picked up. What do you know today? Because there's been a lot of money spent on the project historically. So I guess you're going to tell me you've got a deal here, but what is the deal?
So we are acquiring it in total for value of which, call it combined a little more than 8 million cash and the balance of about a $25 million value in First Mining shares. So this is a really accretive deal. If you look at it kind of on an ounce per share basis, this is 30% accretive to the ounces underpinning our share value. If you just look at the actual increase on an indicated basis, it's a 40% increase in our indicated resources and a 50% increase on our inferred resources. So, really meaningful increase in the ounces underpinning the value of our shares. And this is a project, a lot of people have forgotten about over the course of the last 7 or 8 years. Clifton Star put out a pre-feasibility study in a very different environment. In a Canadian dollar gold price environment that was about $1,200. Well, today we're sitting at $2,200, and it still showed a project even back then that was robust and 15% IRR, and to move forward at what you'd consider a very, very low price. So, but this is a project that's had an enormous amount of work done on it. 260,000 meters of drilling between 2008 and 2014. So, we are getting this for far less than the replacement cost of the drilling, let alone the infrastructure that's there, let alone the surface rights that we're acquiring, let alone all of the metallurgical work that was done on the project in that time, detailed environmental baseline work going back 10, 12 years. So, yeah, I think we are getting assets here that are really, really going to be accretive to First Mining.
Okay, so just explain to us why the current owners haven't done that themselves. Have they been cash constrained? Have they been distracted by other better projects? I mean, why you, and why has this deal got over the line?
Yeah, it's interesting. The current owners it's a diverse group of shareholders in a complicated ownership structure between the Beattie Gold Mine project and the Donchester project, which is next door. Clifton Star had optioned them both to move forward, but there were different groups of shareholders, different priorities, and a group of shareholders that really had not had any inclination to move the project forward themselves. These shareholders have owned this project in one form or another since the 1950s. And so there's been a couple of attempts at moving it forward. Clifton was one of them. It didn't work out, and largely because Clifton couldn't make some back-ended option payments in 2015. And we all remember what the equity markets were like in 2015. But that's sort of what left the door open for First Mining to get our foot in the door here. But this is a long-term relationship with these group of shareholders that have owned this project. My first meeting with the shareholders was about a month after I started. And, I think we had a common vision for how we could surface value here and actually move this project forward with real thoughtful development. And so part of it was, this is just giving liquidity to some of these diverse group of shareholders. Some of it is actually having them roll into something that has other good gold project exposure, like we have with our portfolio with Springpole. And some of it is just a relationship, and I think a trust that's been built over the last 3.5 years of working as partners to define a plan to go forward.
So it felt, well, that's just telling me it's been trapped or mired in a sort of disconnected view of how this thing moves forward and cash constraints, because you've got Beattie and Donchester in there, a bunch of other company names flailing around. It was a bit of a mess. So why would all of those guys look at you and go, do you know what? This is the team to advance this, because they're picking a bunch of shares in First Mining, right? So they've got to believe that you can move your own company along and that this asset will do better in your company rather than someone else's. Or is it just a case of, who you know? How do these things work and get put together? I'm intrigued.
I think it's a real vote of confidence in the team, and a large part of what we have discussed over the course of the last couple of years, as we've been discussing how this would come together. In that same time frame, since Steve Lyons and our permitting and environmental team have joined, there are some real parallels between the Duparquet project and the Hard Rock project that Steve and the team permitted, over the last 6.5, 7 years before they joined First Mining. So very similar things. Hard Rock was a small underground mine with an arsenopyrite concentrate with a roaster, left a bit of an environmental legacy that really gave everyone, including the permitting authorities, some real conviction to move it forward as a development project, because everyone recognized that development was the best way to afford the scale of environmental program that's needed ultimately to clean up some of that historic legacy. We have some of that here too, but we have a team that's done that. And not just kind of conceptually done that, like took it from scoping study to construction permits for a project that's now in construction. So when you talk about these parallels, it's exciting from our perspective, but you can bring that real experience to bear, which is helpful.
Okay, and money. So this is not as advanced as Springpole. As we said, right? So how much now you've allocated allocated capital and shares to this project? How much cash is it going to take to kind of move this thing through the phases, as it were, over the next 12 months? You've answered the question. It's not a distraction. You've got the people to do it. Yep. But how much of a cash distraction will it be?
I think over the next 12 months in doing the work, which is predominantly environmental baseline work, trade-off studies around development opportunities, and then scoping what we may do on exploration. I think the next 12 months starts with, between $5 and $10 million. And I think with all of the advanced stage work that's done here, we don't actually need any more drilling to go to pre-feasibility study, for example, right? We can advance this project, I think, far more quickly than anyone really thinks that we can, because of all of the existing work and data that's there around it. That's a real advantage. That is the difference between needing to do $50 million to infill drill it and not. So I think it's call it a program of 5 to 10 in the first year. And then, that I think will dovetail with what we need to do with Springpole as well, continuing to move it through the environmental assessment process. We're looking at the financing options right now, which I suspect is going to be the next question, how you're going to pay for it. But we've got, options A, B, C, D, and E that are all being explored, including, can we use this as a rationale or timing potentially to get some value for the royalty portfolio that we put together. And interestingly, we are getting all of these ounces in Quebec with no royalty on them, which I think gives us some real financing flexibility moving forward. And yeah, ultimately, when we have a chance to chat with our shareholders about this, I think for something that is this accretive, and I think we can put forward a very compelling game plan to move it forward. I think we're going to have a lot of support for this.
See, what I'm intrigued by on moves like this in this kind of market, this kind of economic reality we seem to be in at the moment, is that people can make big moves like that. There's a big move. I think it's a smart thing that what you've done. I think it's a smart thing, and certainly in terms of the construction of a portfolio of assets at different phases. I think it's really smart. But the stock market's not reacting. Share prices aren't reacting. I know this is early hour. Your early hours there this morning. So be interested. Tell you what, do me a favor. Come on next week and let me know how it went. Do me that favor, right?
Absolutely. I'd be delighted to.
But this isn't, and here's the important bit of the question, is that this is not a marketing move from you, is it? Because if you think, we need to pay attention, our stock price has been under pressure on, downward decline. People have lost interest in the story or don't believe the Springpole component technically, or whatever it is that people may or may not be saying out there. This isn't just a gimmick from you. Does this genuinely add value to the portfolio?
Absolutely. Absolutely. I think this is a project that when you look at what the similarities are between this and Springpole and a lot of the projects that were brought into First Mining, this is not, massive inferred ounces that are going to sit as ounces on a balance sheet, right? These are real projects. This is, one of the highest grade open pit projects in Canada, by the way. You look at the open pit resource here at 1.5 grams, and yeah, it's got some strip ratio that's associated with that, but this is, inside this, 5 million ounce all categories project is a higher grade, lower strip starter operation. That is something we're very excited to kind of scope out. That's already drilled to indicated, and maybe that lower capital startup plan for the company moving forward. So it adds a different dimension, in a way that Springpole we all recognize is, as we've scoped it. I mean, yeah, there is a start smaller, but it's a difficult project to start smaller because the ore body kind of wants to be mined of a certain size. Springpole is, I think, more likely to go down that path of partnership with larger mining companies, just by virtue of the size and scale. I think Duparquet actually offers an opportunity to do something slightly different, which could be a little bit in the vein of the start smaller and expand. And yeah, with great support in a community that's, they've been mining in this community since the 1930s. I think there's a lot of work that we still need to do to build our social license in the area, but even just the conversations we've had to date have been very supportive.
Okay, and you said there's some kind of network associated with the thing. So, what are there difficulties associated? I mean, you think refractory issues or
it's
cyanide issues.
Yeah.
But can you recover gold economically?
Yeah, the test work extensive test work done in 2013 and 2014 shows you can get recoveries up to 90%. So very good flotation recoveries. Like 95% recoveries to a 5% mass pull. And all this detail is actually already on our website. If you go in and find the 2014 pre-feasibility study done by Clifton Starr, all this work is detailed. Extensive variability testing through different zones of both flotation, and then ultimately they selected pressure oxidation as the main avenue to test the oxidation in order to deal with the refractory nature, and net recoveries in excess of 90%. So it needs treatment, but you do and you can get good recoveries out of it. What's interesting is that some of the other projects that we have just down the track, and this is adding to the Pit project that we own, adding to Duquesne that we own. Both of those projects are 10 to 15 kilometers to the east. More classic kind of Archean, narrowish vein, high-grade underground projects. Duquesne is a past producer. But there's a lot of other kind of potential high-grade satellite feed that, when you have the infrastructure, could come in and again, I think significantly add value to an integrated process here. So a lot of work for us to do in terms of trade-offs, looking at a couple of different things than they did the last time. But with the data set that we have and the work that's been done, we are starting years and years and years ahead of where a project just sitting with this resource would normally be.
Okay. And I'm sorry I'm keeping this kind of fairly fluffy and sort of helicopter level today because, I think this announcement deserves it, but I would like to get into the weeds with you another time. But you're saying like Springpole potentially, because I guess the large CapEx component would require some of the big balance sheet to come in and partner with you there or take it over to some degree, whatever that looks like. You've already got partnerships with Pickle Crow and Houtbrook, and obviously Treasury Metals you're a big shareholder of as well. Those are kind of partnership models, but you're always saying here is with something like Duparquet and possibly Duquesne or Pitt, those are things that you want to retain control of in terms of moving it forward to being a producing mine, right? So the model isn't entirely, let's just like farm this out, let's just partner, let's just outsource the problem here. There's a kind of degree of control that you want, is that right?
Yeah, with this project, I think we want to bring our team and our background and capability and skill set to bear in scoping a different project, in thinking about it a bit differently, in the same way that we have done at Springpole over the last 3.5 years. It's not just been a progression of going down one study the same as the previous study. We've made significant changes, and it comes down to kind of one of the core values of our company, which is there's kind of always a better way to do things, right? So you need to keep looking at different alternatives in order to find the best way, be that on environmental issues, be that on financing, be that on project evaluation. So no, we're very excited about this one. But again, we're not saying now First Mining is going into production on this project. But I think we have a team that can certainly scope a project that would not have the capital constraints that another project that's sort of by definition a big capital project like Springpole might. It just leaves you with a little bit more flexibility. Okay.
Well, Dan, I think I'll leave it there, but I wouldn't mind sort of digging into the weeds a little bit technically with you whenever you're around on what it is that you've picked up here. Partly that, and partly I want to see what the reaction in the marketplace is to this. And I guess the third component is maybe just expand a little bit in terms of how you, because I'm just looking at the reaction, to your story in the marketplace and trying to understand what the narrative currently is, what people are thinking about that, and I guess more broadly is like, what do you need to become to kind of get the credit for the sum of the parts, as it were? Because if you kind of break everything down, put a value against it, it probably wouldn't be what you're being valued at right now. I suspect. I suspect
too. Yeah.
Right. So what is it? And that's what I'd like to try and work out. So look, appreciate your time today. Thanks I know I'm about your 10th phone call, and it's only about 7:30 in the morning there. So appreciate your time. We'll catch up with you soon. Okay.
Wonderful. Thanks. We'll aim to chat next week.